Welcome to Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 on KATX and KWBY as Angela Robinson joins Terry Slavens to share important financial information to help you live life on purpose. Insurance, investments, estate and tax planning, and much more. All covered now on Life Planning 101.
And welcome into Life Planning 101 on this marvelous Monday morning. Terry Slavens with you, and we have Angela Robinson with us as usual, and special guest, Erin Kennedy.
That is right. We have got a busy day. It is the week after tax time, so you can imagine no other topic but memoirs from tax reform so far this year. And then also we have our very own CFA in-house talking about none other than this crazy ride in the markets that we've been experiencing.
Like the weather, isn't it? I mean, it's just a roller coaster.
That is right. So we are going to kick it off. No time to waste today. I will tell everybody you don't want to miss a minute of this show because there's going to be tons of good information about what we're finding, what we're seeing in the tax code, and then, of course, everybody has the market on their minds with this crazy volatility. So with that, our very own CFA, Erin Kennedy, in-house that manages our money. I'm sure he's going to tell us that all is well and we can all just go home and enjoy the ride, right?
That was easy.
All right, go to work, Erin.
Good morning, everybody. You know what? This market right now, it is crazy. But, you know, if you take one step back, the market, it's flat. It hasn't done anything this year.
Yeah,
you know,
it's not up, not down.
Yeah, nobody's hurt. You know, it sure feels like it hurts, but, you know.
Got a little spoiled for the previous 12, 15 months.
Yes, we've been spoiled for a long time now, and we've been super spoiled because there's been no volatility. The only volatility that there's been is straight up, you know, and we like that volatility. But you know, in the big scheme of things, it doesn't matter what direction the volatility is. If it's up or down, it's difficult investor-wise because that's when we make our mistakes. You know, if the market's going straight up or we have upwards volatility, we're getting greedy, we're buying things that are way overpriced, and then when things come back to normal, it hurts. You know, when we have downwards volatility, people make mistakes too. You know, they get out of the wrong things and we let our emotions take over. That's a lot of what's going on right now.
You know, that seems to be a common theme every time you join us, and you join us once a month, but getting out at the wrong time. I mean, that can be the biggest negative that you can do is just letting emotions. I mean, it's Angela talks about emotions almost every week. In some way, shape, form, or fashion.
That's exactly right. You know, if you could be in a coma for 30 years, you would be the perfect investor. You know, you wouldn't mess up.
You'd have a great return, right?
Yes, you would not mess up.
Yeah, that's crazy. But it's human nature. I mean, we do it in all aspects of our life, but it can really hurt you when it comes to your finances.
Yes, that's exactly right. So, you know, if we look at what's going on right now, we're right in the middle of earnings seasons, and earnings are supposed to increase by 20%. That is monstrous. That is absolutely huge. And if our companies are growing that fast, our economy's growing almost 3% a quarter, consumers very strong, we have tax reform. There's not a lot wrong in the economy. The only thing that we have going on is volatility. So if we want to switch our brain around so we don't make mistakes, an easy exercise I do is get a buy list. You go look and see what's going on in the market right now and what's getting hurt. Consumer staples, utilities, real estate, boring basic stuff is getting cheap. And when it comes to investing, buying cheap is usually good for the long run. It may not be the most fun thing, but how bad is the economy really going to get before I quit washing my hair? You know, it won't happen.
Right.
What about brushing your teeth? Earnings are down 30%. I'm going to go to the George Washington model. Wooden teeth, here I come. No, it does not happen that way.
Right.
So try to switch your brain around, and when you see this kind of volatility, say, hey, this is a good deal right now. Would I pick up this company if it would pay me forever 4 to 5% of where it is right now? And it's selling goods that I can use the rest of my life and will never go away. Same thing with utilities. Very beat up right now, but still, we have to have our lights on in our house.
Wouldn't be on the radio
close
without
to summertime,
Yeah,
you know,
air conditioning.
It may be a little bit volatile, and that is one place in the market that we have to keep our eye open, is because interest rates are moving, but they have been moving, and we're more than likely they're not going to move a whole lot more from here, maybe an extra %, but we should open up our eyes and we should start hunting for things that we can put in our portfolio and hold the rest of our lives.
Right.
And it's a great time.
I think that's an interesting thing you say, because a lot of people see Facebook, or they see Google, or they see Amazon, or they see these companies that they know well, and it's fancy and it's popular and it's the name brand, and this simple, boring investment is out of style.
Right.
And I think oftentimes, as a smart investor, you have to remember that if you follow the masses, you end up getting in trouble. If you follow the bandwagon, you keep up with the Joneses investing style, so to speak. But if you go to the contrary, go to the things that people are not looking at, therein lies your opportunity. And that's a huge thing you say, because a lot of people think of their investments the same way they do their clothes. Well, that's not popular and fancy and something I could talk to my neighbor about.
Yeah, that's exactly right.
Something whenever I was in the insurance business years ago, we talked about buying life insurance. It's not something that you go tell your neighbor, hey, look what I just, when you get a new truck, you say, neighbor, look what I got. But you go buy a $500,000 or $1 million life insurance policy, nobody cares other
Right.
than you care, because you're taking care of your family. It's not the popular thing to do.
Right.
That's funny you said that. I don't ever throw away anything. So I pulled out a flannel shirt out of my closet a little while ago, and Molly told me that would never come back in the style. But look at me now. I am one style indeed.
That's right.
Yeah, that's right. We had a client dinner on Friday night, and everybody's dressed up nice. The guy shows up in a flannel shirt.
Yeah.
So there you go.
But everything has its time in the market. If you treat the market almost like going to the grocery store, is, hey, now I'm going to pick up my good consumer staples because they're on sale. Oh, this week I'm going to pick up my good technology companies because they're on sale. You can build a portfolio and not be left in the dirt. But if you're conscious of price, you can always make good decisions and be thinking differently than the crowd.
In the masses.
And that's how you really get ahead, is think differently. Do what others are not doing. And, you keep hearing those same words. Well, what did Warren Buffett say? Well, that's how he made all his money.
Right.
Buy when price is right.
Right.
Sell when price is right. Don't do the opposite.
Yeah. And it's a fine line, I think, between just traditional buy and sell. You say, if I wake up in 30 years out of a coma, I'd be fine. There's a fine line between that and, actually active management, because
yes.
it's extremely important, like you say, to be looking for that, what we call alpha in the portfolio, getting that little extra bit out of that risk versus return by looking for those deals all the time. And I think that's, why people pay us to do what we do on the investment side, is because we are actively managing that. And we're not sitting there in a coma, but at the same time, we're managing people's emotions. And
That's right.
That's just as important, if not more important.
That is the key. We can make as much money as we want to, but if we can't keep the investor in the investing chair, we're in trouble.
Absolutely.
So we've got to keep
Great.
those emotions in check.
Yep. Great stuff, Aaron. Thank you so much for being on the show. We
Thank you.
Appreciate you every time you come on. I know all of our listeners look forward to hearing it. And when we come back, you don't want to miss what we're actually seeing from tax reform.
segment 2 already on this marvelous Monday morning. Angela?
Yes, and here we are talking about tax reform. I don't know why taxes shouldn't be on anybody's mind after week after having to write those checks and send in those quarterlies. And it was an interesting week, I think, last week because we, of course, were talking to a lot of CPAs and accountants and clients. And funny thing is, they've got a new software if the CPAs are using it to be able to plug in your numbers and see what your taxes will look like for 2018, sort of. But what's really interesting is that there's still a lot of unknowns about what they meant by certain things in the tax code.
They don't even know for sure.
They don't even know for sure. And I'll give you a great example of that is rental real estate. So there's a section 199A, which is this nice little pass-through entity deduction, meaning anybody that has a sole proprietorship, partnership, LLC, S-Corp, any of those pass-through entities, if they fall below the certain income limits that we've talked about on the show before, they get to deduct 20% of their net revenue as a deduction on their tax return. Well, it's still unclear whether rental property owners are going to get to take advantage of that or not. So, the big thing is you could end up at the end of next year and you could have a big refund or nothing at all. And how do you plan around that? How the heck do you even know? It is crazy, and they haven't clarified it. The same thing, and I think this is huge for business owners, is on, what they meant with this entertainment and client expenses and travel expenses. I mean, they were pretty black and white that, if you go on trips and you eat along the way, which I would assume that you're going to do that to stay alive,
right.
You used to get 100% deduction for that. Well, they slashed that in half. And that was pretty clear. Now, on the other part of that coin was you used to be able to take a client or a prospect to lunch or dinner or, an entertainment outing or something like that. Well, they have come back and said, we didn't mean to eliminate that deduction, but they also haven't said we're going to reinstate that elimination and to what degree, because you used to be able to write off 50% of a lunch when you had it with a client or a prospect or whatnot. But right now it's zero. They could come back and reinstate that. We don't know. And entertainment deductions, like if you throw a appreciation event for your clients or you do any of that, that's gone. It's completely gone.
See, that's crazy.
It is crazy.
Because we do customer appreciation.
That's right. I know,
here.
Right.
Y'all do a lot of that kind of stuff.
That's right. Our local hospital is currently trying to get golfers, and if you play in that golf tournament, you cannot deduct that expense anymore. So there is a lot of crazy laws that I think have to get cleared up, and they don't know, and the CPAs and accountants don't know. They're ballparking. But, I think there's a couple areas that you need to really pay attention if you're in one of these classes. And one of these is we're seeing individuals, okay, not married, single filers. And whether you're working or you're retired or whatnot, you could end up paying just the same amount of taxes, if not higher taxes this next year. And for several reasons. Yeah, your overall tax rate went down, but you have to remember about itemizing, right? Now your exemption went from, your $6,100, whatever it is, to $12,000. Or your standard deduction,
right.
Which sounds all fine and dandy, but you take somebody that lives in Fort Worth and their property taxes are $12,000. Well, they just lost $2,000 of their deductions, and on top of that, they've lost their miscellaneous deductions. So those are things like what you do pay your accountant, what you do pay your investment advisor. And my favorite of all of these is when you have a salesperson or an executive that is a W-2 employee, but they may spend $15,000 to $20,000 a year on expenses for themselves to be able to grow their business because their company says, well, we're not reimbursing you for going on your trips, for hiring someone to work for you, for all of these things. We used to be able to itemize that under miscellaneous and get that deduction. Yeah, it was subject to AMT, but you could get some of that deduction. Well, that is gone. So now you have somebody that if they have $15,000 to $20,000 of expenses every year as a W-2 employee, they just lost those deductions entirely. And what does that do to them? That's massive. So
big.
it is big. And one of the things that we've been studying, and I've found about 7 court cases on this, and there's been 2 that prove negative, 5 prove positive, that a W-2 employee under certain conditions can actually turn that into a Schedule C business for themselves and turn those deductions back around.
Right.
Which is awesome, but you got to be able to know how to do it, because now you get all those deductions back and you never worry about AMT again. So can things be done to, offset what we're seeing on this negative side? Absolutely. It's just you've got to take the time right now to get a game plan in order, because if you try to do this December 31st or some people April 15th next year, it's not going to work.
Or October 15th.
That's right. That's right. Or October 15th worse. Okay. Yes. You can't do it. So, you need to think about, what can I do right now? So if you're that individual, especially in a sales position, exec position where you've hired people, you have expenses, you need to be considering what you can do there. If you're an individual that does have high state and local property taxes, you need to look at what you can be doing right now. And retirees, individual retirees, we're seeing lots of issues there. I've ran I don't know how many numbers over the past few weeks, just getting in tax returns and looking at a comparison. And those clients, some of them may save a little money. Most will save nothing. Some will end up paying more. And it's just, there's ways to maneuver it, okay? There's ways to get around it, such as, repositioning how you take your IRA money, or looking at some tax diversification strategies. There's some ways to get around it, but it takes a little effort. It's not something that you can just do backwards, again, April or October next year. You've got to start working on it now. In fact, we had one of these clients last week. They sent their stuff down. What can we do going forward this year? And they had already taken their required minimum distribution. I said, well, you can't do anything now.
Too late.
It's too late.
Yeah.
So, before you really know what you need to do or how you need to structure things, you need to sit down and figure out what this actually means for you. And unfortunately, like we talked about on the show before, is your CPA or accountant has been working on what since January 1 when this thing actually rolled out?
Trying to figure it out.
No, they've been working on your 17 taxes.
Oh, yeah, true.
Right? Yeah. So, it's
still,
good.
The old rules.
The old rules, right. So it may take them till, midsummer to get up to speed on what's going on, and that may be too late. So
a lot more clarity to come in the next year.
Yes, there is. So when we come back, you don't want to miss it. We're going to talk a little bit more to business owners and estate planning.
Final segment. Let's get to it, Angela.
Yes, we're talking about some tax memoirs, I guess you could say is what you could call it, of what we're seeing so far with 2018 tax reform, really just coming off of, 2017 filings and rerunning numbers and looking at how things are going to look. And I want to speak a little bit to business owners and then also to estate tax planning, because this is really big. But business owners, and we've mentioned this on the show before, you need to find out if you are what is called a service business or not this year. Okay, and if you are a service business, I'm going to give you that definition. So they say it leaves a lot of room for interpretation. Yes, any trade or business involving the performance of services in the fields of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, brokerage services, or any trade or business where the principal asset of that trade or business is the reputation or skill of one or more of its employees, excluding architects and engineers. They got the out. Okay, but the importance behind that is back to that Section 199A deduction if you're a pass-through entity and being able to get that 20% deduction or not. And the rest of the businesses may be phased out of that deduction in one way or another. These businesses can basically just say, you didn't get anything. So if you couple that with the loss of some of these other deductions that are going on, these business owners, it could face serious ramifications on their tax returns. And I'm going to forewarn specifically attorneys and doctors, okay? If you own businesses, you need to be doing tax planning right now. We brought up on the show what was it, about a month ago, about a doctor that we actually took the tax burden down from a 6-figure tax burden to a 5-figure tax burden, and it was about a 70% savings.
Right.
But it's not something you can wait till last minute and do that. You really need to know where you sit on this and do something today, because it is extremely important. If you wait, you're going to run out of tools. They start to disappear throughout the year because there's deadlines on every type of tax tool that you want to do. So, that's really important. The other thing to think about, I think, is all of this has a end date according to this tax reform of 2025. And it's kind of like a tax ticking bomb, because we have no idea what that's going to mean. We don't know if it means they're going to extend it. We don't know if they're not. We do think that taxes will go up again in the future with, an aging population of baby boomers and a massive amount of debt. We believe that. So if
we have no idea who will be in the White House.
That's right. We have no idea of any of these things. So, I think it is extremely important that you take advantage of these few years. And I know that's hard to do. I know it's like your health. You don't appreciate it till it's gone. Tax reform, you don't appreciate it until it's gone, okay? Because it's going to hurt if you don't do anything while you can, because most of this sunsets. And a prime example of that is estates, okay? Now, when I first started learning about this, we get to go to this tax attorney that it's who the IRS calls when they don't understand their own tax code, right?
Right.
And he wrote up on the board the letters SOL. And everybody's like, does anybody know what that means? And he goes, statute of limitations.
Oh.
Okay, so virtually there's a statute of limitations of 3 years around estate taxes. And so if you actually count the number of years till we have an election, could get actual tax reform and changes, we have 2018 or never. Right. To do a significant amount of estate planning, because your estate exemption doubled this year. And so far this year, we actually just worked on one last week. We were able to take an existing occurrence of a piece of property selling and turn that property into about $1.5 million for the family in estate tax savings because of the new tax code. We have another ranch that we're working on right now. It's about a $10 million ranch. It's got a very, very tiny cost basis. And what we're looking at is going to allow that family not only to be able to be protected from any events in estate taxes, but we're also going to get rid of the income tax problem, because the family's going to be able to get a step up in basis. I'm not going to tell you how we're going to do it. That's why you have to pay us. But that is what we're doing. So, estate tax planning is not just around estate taxes. It's also around income taxes. So if you say, well, I don't have that much in estate taxes, but you do have a lot of assets that have a very low cost basis, now is the time to be doing something with that. Don't wait, because you're going to run out of luck, and the same holds true for all the way from estates to businesses to individuals. 401ks, we call those the ticking time bombs if you don't have tax diversification. So, make sure you're doing your planning. You don't want to wait to do it. I cannot stress that enough, because you will regret it, and it will be like your health. You didn't know what you had until it was gone, and then you're like, oh, what did I do to myself? I mean, just imagine if you could let Uncle Sam pay for a quarter of your retirement or half of your retirement.
Nothing wrong with that.
Nothing's wrong with that. Yeah. So, but you got to do something about it today if you want to see if that can happen. You can't wait, because it won't happen. With that, my name is Angela Robinson, Kennedy Financial Services right here in Eastland, Texas. We thank everyone for listening in every week, and make sure you visit our newsletter. And go to Kennedy-financial.com. There's going to be some great tax facts, and of course our market update in there again from Aaron Kennedy. If you didn't get to hear that, you don't want to miss that as well. God bless everyone, and have a great week.
Thank you for joining us for Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 o'clock on KATX and KWBY for more Life Planning 101.
Advisory services offered through Smart Money Group, LLC, a registered investment advisor. Securities offered through Calton & Associates Incorporated, member FINRA SIPC. Kennedy Financial Services Incorporated is an independent of Calton & Associates Incorporated and Smart Money Group, LLC.